right, everyone. Welcome to Cherre's third annual Data Summit. Please welcome our CEO, LD Salmanson.
There we go. Awesome. It is really, really fun to be here today. Thank you all for joining. When we started this a few years ago, we wanted to do something special. It's a little different than a lot of the types of conferences you tend to go to, and we were very apprehensive doing it, candidly, right? It's just a hard thing to create a good conference. It's hard to get a conference that people want to come to year after year that's exciting. So I'm really, really happy. Thank you, Keynote and the team, for making this happen, and thank you all for joining us again. As I always say, and I'll say it again, today is not about us, it's about you. I'm very proud of what we build, but it's not about us. It's about you, the dreamers, the builders, the performers, the people who wake up every single day building things on top of Cherre that make every second of our life worthwhile. Thank you so much. I really can't describe how much it means to us. To our clients in the room, to our partners, to our employees, and to our investors, thank you so much for putting your trust in us. We work really, really hard every day to earn that trust, and we're going to continue to do so for a really, really long time. Thank you so much. I want to thank our sponsors today. It's an incredible show out here. PwC, LionPoint, CBRE, Google, Cohen-Resnick, Dwellsy, Latham Watkins, and ProDot. Thank you so much for being our sponsors and being part of this event. Don't miss the PwC report a little later today on that session. And if you're part of the LionPoint roundtables, please don't miss that. They're both going to be really, really awesome. Amazing day for you today. Most of the main sessions will be here. Following me will come up on stage. Brett Fox and Emma Buckland from CBRE in Brookfield talk a little about kind of the new target operating model and their really landmark deal that I'm really excited for them to talk about. We'll have Tom will wrap up the session here. We'll hear right before that our product roadmap. Then we'll break out to two sessions, right? So one or two tracks, right? So one will be a little more technical, right? Not super technical, but a little more technical. One will be a little more business. So kind of choose your own adventure there and feel free to kind of run around in between. The title today is Creating a Sustainable Data Future, but for both of you, that feels kind of like everything everywhere all at once right now. And I get it, right? Everything's changing in real time. We got changing macro environment, not easy. We have a changing micro environment within our organization, and we have this shifting expectation, which is just unreal, right? So let's start with the macro. And it's hard, right? We're still in the COVID event. I know we're in 2024, but it's still COVID. How do we know we're still in COVID? Because nobody's going to the office. And there's some and by the way, I apologize for being a little fuzzy. We couldn't find a better picture of this. There's great research just came out from CoStar the other day, which shows there's actually a decoupling between the occupancy and the demand, which is a little interesting, right? They're not one-to-one relationship. And it's not uniform across the US. But what we do know for sure, though, is that number hasn't been rising for a really long time. Somewhere in that 50 to 60%, it's been pretty stable there. So none of us should be surprised that office valuations are coming down. And none of us should be surprised at less volume of transactions happening within that space as well. A lot more of that's being diverted to other places. It's going to switch when distress starts coming up, right? So as the stress starts coming out over the next couple of years, we'll see a lot more of those office transactions. This isn't going to be a quick office event. It's going to take a long time for this to work out. Probably somewhere between half a decade to a decade before all this debt gets recycled. And we should just get ready for that, right? It's not this. If you have another expectation, I want to get you all ready for this is the expectation that you should have. And we should also not be surprised in the highest interest rate environment in history. We got a lot of debt outstanding right now, right? A lot of variable debt just got really, really expensive. And it's all sitting on the bank's balance sheets. Not all of it, but most of it. And that's kind of scary to a certain degree. But some things that make us a little less scared is the fact that this is only a real estate problem. I know it's kind of funny to say to people in the real estate industry in the room, don't worry, it's only a real estate problem. But this should be good, because if it wasn't only a real estate problem, we'd be in a big problem right now. It means we have a systemic problem across the industry. We don't have that. We have a real estate problem. And we just saw that real estate problem is really focused on two areas. Retail, which has been a problem for many, many years in the US. Why? Because we're just overbuilt. Now, it doesn't mean that retail is a bad asset. Actually, if you look at some of the cap rates of some of the good trading assets right now in retail, they're doing really, really, we're looking at 7, 8, some really, really great numbers for those good assets that can trade. So it is the case that there's some issues in retail. But the big problem is office. And it's not surprising. Less demand, less value. That's all it is, really. It's going to take some time to work out. And the good news is the best estimate of how much risk is in the system is telling us that they're not really scared of the banks going under. Now, of course they're not scared, right? Fed's basically given all the banks, give any mod you want at this point, we'll prove it, right? And you want access to the window, it's basically there indefinitely. And we're going to be a little loose on those stress tests. So, of course, nobody wants a banking crisis, but still, the market is telling us something very important, that this is not a risk that we should be too afraid about. I know you're all talking about cost cutting in the room, but you all have more money than ever. You're all sitting on massive budgets. You're all sitting on massive budgets that many of them grew from last year. So we're looking at budgets that grew from last year, and we're talking about cost cutting. Even if they stayed flat, even if they're slightly smaller than last year, there's an incredible amount of money on the table right now. In the investment world, we're sitting on record capital. All we have to do is look at some of the folks in the room. You've raised some really, really big funds recently, and a lot of you are fundraising as we speak. There's a lot of money available going somewhere. As my grandmother used to say, so long as people are stupping, real estate's going to be fine. Got to go somewhere. Living's a zero-sum game. I'm going to go live in a house. I'm going to go live in an apartment. I'm going to live somewhere, right? And that's really, really great for core CRE tenancies. Is it happening where we expected? No, right? It's a little hard to predict supply and demand in a really, really shifting market. COVID is this one, in our lifetime, hopefully once in a lifetime event. What that really means is that we didn't predict demand and supply where it was specifically supposed to be. Everybody fled to the suburbs really, really quickly. And the suburbs were already limited in supply, right? So it's not like all of a sudden it's all the supply that just gets filled up. Everything got filled up quickly, and prices started rising everywhere. And the great Sam Zell taught us that the starts of commercial construction are always correlated with availability of capital. It's not correlated with demand. And it's very clear to see here. We're not going to have a lot of starts in new construction for a while because capital is not cheap right now. So in the multifamily space, some places are a little oversupplied right now. That will clear out really, really quickly because, again, nothing is coming on the market in the near future. And if you look at the other side of the house, a single-family rental, or single-family generally, you might say, well, it looks good. We're starting to fill in some of that demand. Got some bad news for you. The vast majority of this is going to the SFR market. So this is mostly built for rent, built to rent. It's the same folks, some of you in the room, who can no longer buy in the public market in the way you could before, right? You can't compete on an MLS transaction with somebody who's going to live in that apartment, right, or that house. They're going to spend more money on it than you can. So the economics just don't make sense for market transactions. So the only option you have, besides just buying other portfolios, which clearly all of you have been doing really a lot lately, the other option is going upstream and going to build and buying that supply before it even hits the market. So that's a little unfortunate there. Hotels are doing amazing. I know the cap rates are not as good as we'd like. There's some distress in the hotel, a little more than I'd like. But office travel hasn't come back to its full degree, and we're still only 11% below what we were pre-pandemic in New York City. That tells us that tourism is so high that it's making up for the deficit that we had from the general office travel. That's very, very encouraging. Then finally, we're in the middle of the biggest boom of our lifetime when it comes to AI. You can't build data centers fast enough. The hyperscalers, the biggest firms in the world, some of you in the room here, thank you, can't build fast enough. There are literally folks here, the whole strategy is, I'm going to build data centers or buy data centers, a place where the hyperscalers are just going to rent from me until they can build their own. That's incredible, right? Think how much demand exists in the market right now for that to be a strategy. This is an incredible opportunity. It won't come again. And moving from the macro to the micro, everything's changing internally. I used to be a multifamily REIT focused on a certain geography. Now I'm in 13 different asset classes. I used to be focused on New York. Now I'm in every geography in the world. I used to run everything in-house as an owner-operator. And now I own some stuff. I operate some stuff. I have 16 other JVs. And you name it, I got something in my organization. And none of this is something I predicted just a few years ago. And with that comes incredible complexity. Complexity of target operating models. We'll hear a little about that in a second. Complexity of technology systems. We'll hear about that later today. And complexity just of thought, right? I have to try and figure out how I make all this work in a way that's meaningful. And that requires flexibility. And I know we're not really great at flexibility in this type of room, right? We're kind of rigid organizations. We move really slow. It's not that we don't want to be flexible. We're just not good at it, right? And at the same time, our buildings are getting much smarter. Our interactions with the buildings are becoming a lot more meaningful. The information coming out of the building, it matters to us. We care. Where did somebody go? Why did they go there? Do they want to go there again next time? Should I plan something about the elevator or the entrance that might change that interaction? How can I make the people in my building happier and more excited to come to work every day and spend less money doing that? Very, very hard. It often just feels like we're trying to hang on, right? Everything's just moving so fast. Everything's changing. And we just want to hang on. And I want to encourage you to think about that as a good thing because the last Renaissance man died a long time ago. We can't do everything. Some things you're going to be really, really good at. Some things you're not going to be good at. And basic economics tells us that if you only focus on the things that you're really good at and you outsource the things that you're not good at to people who are really good at that, you will outperform the market 100% of the time. This is math. It's not something special. That's exciting. So I encourage you all to think about what is it that you do really well and find out how you do more of that and less of that of the other things. And then finally, if it wasn't hard enough, we have this shifting expectation problem. And I'm not trying to blame AI for this, but I am blaming AI for this. Because yes, we've seen a lot of cool stuff happen over the last couple of years, but most of the exciting stuff happened way before, we just didn't talk about it. And what does that mean? It means that all of a sudden something that most of the practitioners in the room kind of knew in the back of their head or were active in, especially folks in the data science community, also just got really real for everyone who was in that community. Maybe even scary, right? Because all of a sudden I look and say, wait a minute, these models are outperforming humans in many, many tasks. This is a year-old chart. GPT-4o came out. It outperforms everything on this list right now, and it's free. Token costs are down over 80% in a year and a half. It's an incredible opportunity. It doesn't replace human reasoning, though. But it's coming really, really, really fast. I can only imagine what this is going to look like throughout the year. And that's terrifying. I get it. But is this a US thing that clowns are scary? Or it's like, I don't know. I hate, yeah. But it's scary. I get it, because things are changing. None of us are even practitioners, none of us are experts about this space. We're still trying to figure stuff out. It's a great interview the other day with Sam Altman, and he said, I'm cautious about making predictions for the end of the year. There's a person sitting within OpenAI with the most information is telling you, I'm skeptical about making predictions for the end of the year. And in the context of legislation around that, his next statement was, how can I legislate something? We're going to get it wrong for sure, right? It's not even a question. We're definitely going to get this wrong. And I get it, it's scary. But for everyone in the room, this is the most exciting moment of your life, because you all just got superpowers. And I don't mean the shitty kind, you have to get bit by some radioactive spider or born on Krypton. You just got to be rich. You're Batman. Everybody in this room is rich. Isn't that great? So these superpowers are available to everybody in this room today, and that's a really, really exciting opportunity. And you're not being replaced, which is also kind of cool. Maybe in the long run, not in our lifetime. Because in our lifetime, we're getting the computer from Star Trek. By the way, does anybody remember the name? Raise your hand if you remember the name of the computer from Star Trek. Can't even get one. It's called LCARS, by the way, so yeah, we got one there. There's a reason you don't remember, because it doesn't matter. That wasn't the hero of the story. The hero of the story was Picard. The hero of the story was Shatner before that. The computer was never the hero. The human plus the computer always outperforms the computer and always outperforms the human. You're getting data. You're getting your best executive. You're getting a best employee. You're getting a lot of your best executive employees. And by the way, looks like they're going to be cheaper than your existing ones, and looks like they can outperform them by a lot of things. So everyone in your organization just got way better. Each person just got a sidekick, a co-pilot, if you will. Life is about waiting for the storm to pass, but learning how to dance in the rain. We're going to look back at this moment in 5, 10 years. It's going to be the most incredible moment of our lives. It's scary? Sure. It's also really exciting. I want you to embrace it. I want you to get excited about it. Let's go dancing. Thank you. And with that, I want to invite to the stage Margaret Gilzo, heads our client success organization, together with Emma Buckland and Brett Fox. Thank you very much.